This bounce is not convincing me yet. I'm hearing lots of takes that this is a 2021 style immediate reversal and we're going to go back to all-time highs from here. I'm also seeing a lot of people say the end of QT is immediately bullish for alts. Both of these things I think I can disprove with data. So let's get into the show.
This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research.
Hey guys, I'm Alessandro. Welcome back to the show. So the first piece of evidence is Bitcoin, right? Now, normally Bitcoin, once it closes underneath its 50-week moving average, it's generally the end of the market. It's end of the bull market. It happened here in 2014, happened again in 2017. In 2021, during that first correction that we had, Bitcoin tested the 50-week and it rebounded. There was never any closures underneath. As soon as it closed underneath in October, that was the end of the bull market. In November, that was the end of the bull market. Sayonara, see you later. So obviously, those two things right now are different. 2025, we've had a closure underneath the 50-week. In 2021, on that first summer style correction, we didn't. Yes, we did later in the year. Another thing that sort of makes me think, do you know what, probably isn't a 2021 style correction, is it just isn't the 4-year cycle thing. And I'm not really a 4-year cycle necessarily believer. I think probably this is tied to liquidity much tighter than it is to some random arbitrary number based upon the halving, especially now that the halving has such a low impact on Bitcoin because the amount of coins that are being mined every 10 minutes is so insignificant relative to the market cap. But the key thing I think is that during this 2021 correction, QE was still ongoing. There was still basically 9 months left of QE. Yes, Bitcoin still peaked and QE went onwards, but QE was still ongoing, right? QE was still there. The 2021 style reversal still took, 100 days for it to go back to those new highs. And you could argue that we kind of had a very similar thing here in the tariff pullback. We had the tariff pullback and then we rallied to new highs. Very, very similar situation to what happened in the summer of 2021. The other thing people are saying is that QT ending is going to be the thing that flushes liquidity into the market. Again, I don't think in the immediate term this is necessarily true. Yes, I'm super bullish on a sort of longer time frame. I think there's more liquidity coming into markets. I think risk assets are going to see that. But in the immediate short term, I don't think it's an on-off switch. There's a few things I want to show you. So first of all, this is when QT ended. This is QT, the first QT that we had back in between 2018 and 2019. When it finished, it took Bitcoin 455 days to reclaim the level where QT began. This is Bitcoin's reaction to QT and QE. We just saw last time when QT finished right here, Bitcoin took 455 days to get to new highs, right? Pretty long time. But not only that, Bitcoin dropped during this time. And not only that, last time there was a stealth QE that happened. There was a period of time where the repo market basically blew up. There was no secured overnight funding for banks. They were really struggling. So the Fed had to do an emergency QE. They called it stealth QE, but Bitcoin came down in that period. It lost about 60% of its value during this time. So QT ending didn't send Bitcoin on a rampage. It was COVID stimulus that ripped Bitcoin to the upside. From the low to the end of that QE period, Bitcoin gained, 11x. From the wick low to the spike to the wick high, yes, it's more like 20x, but still. QT stopping, quantitative tightening stopping, was preceded by a dump from Bitcoin. Now, after 2021, this level here, we've been in a QT environment for a while. But another thing it's worth remembering is in the middle of this entire cycle, for an entire year, the Fed were actually going through another stealth QE. They were easing because of the Silicon Valley bank collapse. If you don't remember, back in 2023, there was a large blow up from Silicon Valley Bank. This bank was a big lender to Silicon Valley, obviously. So a bunch of tech and a bunch of crypto companies relied on this bank and they blew up. So the Fed issued an emergency bank lending program, which was essentially just stealth QE. And what you can see is during this entire Bitcoin run from the low to the high, a decent chunk of those gains came in the year when stealth QE was re-announced. So obviously QT is stopping right now. As we said last time, it was preceded with a dump. And this is where the nuance comes in, because Bitcoin is one thing, but people are looking at alts specifically against Bitcoin. Last time QT stopped, from the time QT stopped over here to the time QE, or the real QE, not the stealth QE, began, the ratio of alts, excluding Ethereum and stablecoins, rallied about 50% against Bitcoin. However, when we look at those alts in terms of their market cap, so in dollar terms, they lost during that period. I'm going to say that again. The ratio of alts against Bitcoin the last time QT ended was quite good. Alts gained a little bit against Bitcoin, but the last time QT ended, those same alts lost 45% of their value against the dollar. So QT ending wasn't a blanket number go up policy. And you could say, Alex, look, well actually, before COVID happened, these alts were up a little bit. And was it the alts were up a little bit and then COVID happened and then they completely got wrecked? And are you being facetious by just choosing the period at which QE began? But it still took, the best part of 6 months from QT ending for these alts to go up and beat that level. So it's not an immediate on-off switch. Quick shout out to today's sponsor, Ledger. Ledger have a Black Friday deal at the moment. These things are never discounted, but at the moment, Ledger have about 50% off their Ledger Nano X. This actually is my favorite Ledger. They have very good deals on their whole range. You can get the Ledger Flex or the Ledger Stacks and get about $80 in Bitcoin back. Holding your crypto in a hot wallet that's just on your computer is incredibly risky. Believe me, I had my tokens stolen because I did exactly this back in 2021. Check out Ledger, link in the description. Thank you very much for Ledger to sponsoring this portion of the video. So this is the chart of others divided by Bitcoin in market cap terms. So others are all the tokens excluding the top 10. Obviously the top 10 we're going to have Bitcoin, Ethereum, Solana, etc. This tells you the true sort of like altcoin market really. And what you can see is that when QT ends, those alts immediately do better against Bitcoin. This is interesting because this isn't traditional for what you would expect to happen. Now, you could argue that QT ending means that liquidity is going to be a bit easier to flow into these alts, and actually people are going to have much higher risk appetite. If you just look at others against Bitcoin, that would be correct. Others do a bit better than Bitcoin. So arguably QT ending means that alts can be in an environment again where they can do well. However, when you look at others just on their USD pairs, so this is exactly the same chart, except now we've got others as the candlestick pattern and others over BTC as the line pattern. And what you can see, others on their USD pairing between QT ending and QE starting, this is COVID QE, they lost 33% of their value. Again, you could argue, Alex, there was this obviously this period here was COVID, Black Swan, maybe you shouldn't measure this bit. I wouldn't necessarily disagree, but then I would say, look, they still went down for the first 4 to 6 months when QT ended, despite the fact they went up on their Bitcoin pair. So others over Bitcoin gained in value, but others against their USD pair lost value. I am less inclined to think that this is just a switch is turned on, bull mode activated. I still think Bitcoin's heavily pressured to the downside. There's a few things. The first thing is that normally when Bitcoin makes a low, it sweeps that low. Right here, look. It made the low here, it comes out and it sweeps the low there before it goes onwards. It makes the low here, it comes out, it sweeps the low. It makes the low here, it comes and it sweeps the low before moving on. It makes the low here, it comes and it sweeps the low before moving on. It makes the low here, it sweeps the low before going on. So if this is the low, I think there's a very good chance, based upon history, Bitcoin at least comes back down and sweeps that low, which means that this is less likely, I think, to be the immediate time that the whole market turns around. We'll get back into the charts in a minute, but just a quick word from today's sponsor. Today's sponsor is 𝗟𝗃𝗃𝗃𝗃. 𝗟𝗃𝗃𝗃𝗃 operate a recurring purchase service for Bitcoin. The service functions through scheduled card payments at user-defined intervals. So if you wanted to buy $1 a day, $10 a month, you get to choose the amount and the interval that you want to DCA. Upon processing payment, the company purchase Bitcoin and transfer it to a user-specified address. This service operates on a non-custodial basis, meaning purchased Bitcoin is sent directly to the user-controlled wallet without ever being held on any platform. So there's no third-party intermediary risk. 𝗟𝗃𝗃𝗃𝗃 is not available in the UK. This information is provided for education purposes only and does not constitute financial advice or a recommendation. Cryptocurrencies can carry significant risks, including loss of capital. Thank you very much to 𝗤𝘲𝘃𝗀𝘃 for sponsoring this portion of the show. The other thing that I think is very, very important here is I'm seeing everywhere the PMI chart used. Now, the PMI is the Purchasers Manufacturing Index. And what this chart shows you, they ask businesses, manufacturers, and they say, hey, are your numbers better or worse than last month? It's a very simple understanding of, okay, if enough businesses are getting better month on month, then the economy is growing. And if too many businesses are getting worse month on month, the economy is shrinking. What you typically see is that peaks in the PMI, so peaks at which the economy is getting better and better and better month on month, tend to coincide exactly with peaks in Bitcoin price. This is where the sort of 4-year cycle comes from. However, this time we've been well underneath this line. The PMI of 50, if it's greater than 50, the last month was an expansion. If it's less than 50, the last month was contraction. The other thing is that a rate cut in December of 25 basis points isn't going to make this turn around immediately. This is going to take a bit of time before it turns around. QT ending in a few days doesn't suddenly mean the market is flush with liquidity. It's still going to take time. And if we look here, this is data from the Chicago PMI print. So there's obviously the PMI is a national survey, but it's done state level as well. Those states are totaled, and that tells you the health of the entire US economy. In Chicago, the print was 36. This hasn't happened since COVID or since the financial crisis in 2008. These are very bad numbers. This doesn't mean the economy is wrecked and there's no chance of recovery. But it does mean that the business cycle isn't just going to suddenly kick into gear, A, because QT ended, and B, because rates have come down by 25 basis points. Arguably, rates are still too high. Rates have been too high for too long for a large number of people. That is true. And this is where we can start pulling things together to start to build a thesis for what's going to happen in the not immediate term, but in the mid to long term. Central banks around the world are easing. Look, over 90% of developed and emerging central banks have cut rates or kept them the same over the last 6 months, near the highest level since the 2020 pandemic. What does this mean? It means global monetary policy is easing. We know monetary policy in the US is easing, but these things take time. They don't just turn around immediately. And we saw this last time. QT ended. We didn't see an immediate run on alts or Bitcoin against its USD pair. Yes, alts actually gained some ground against Bitcoin. Maybe this is the time to start really thinking which are the things that are holding up best against Bitcoin. But in reality, they came down against their USD pair the last time. I think it's still going to be a tough environment for the nearer term. But if we zoom out a bit further, I do think there is going to be fresh liquidity that comes into the market. I think we could eventually see the run that we thought we were going to get across, the remainder of the altcoin market. I still think only select tokens are going to be the best performers. I don't think it spills over across absolutely everything, but I do think we're coming into a place where the market is going to be slightly easier. Anyway, that's just what I think. Taking all these charts and looking at what happened last time QT ended, comparing it to now, you could argue they're very different things because obviously COVID happened pretty soon afterwards. But as I said, I do think that we see pressure continue to the downside, even if alts start to outperform Bitcoin. I don't really think they're going to outperform their USD pairs, but who knows? I could easily be wrong. The reality is, one person's idea of what's going to happen is much less likely to occur than what will actually occur. When you think about it, it sounds pretty obvious because my reality is one reality that exists in an infinite world of possible realities. I'm always open to changing my mind. I have no firm set beliefs. I just want to see data to see what happens. My actual process is pretty simple. I'm still very bullish long term. I just don't particularly think the next few months are going to be plain sailing. But let me know what you think. Otherwise, thank you so much for watching. I shall see you in the next one.